Hi guys, and how are we doing? My name is Trader Miju from Trade with Bolu Online Services, and you're welcome to our Forex Basic course. And actually, this is a course where we just introduce you and give you some little information here and there about the Forex market, basically for beginners. And even if you are not so new into Forex, you can learn one or two things from actually this basic course. And today is our first lecture, and we are going to be looking at an introduction into the forex market. Okay, so diving in straight, we have a risk warning which says that trading forex carries some amount of risk, and you actually want to be careful at all times when trading. You may need to pause this. Okay, you may need to pause this in order to check out our risk warning beforehand. So we always have a motivation quote at the beginning, and actually the motivation quote is actually kind of a guide, okay, like a vision we are seeing, because we say never give up at any time, keep pushing harder. The way forex is, there are so many people that have given up along the way, and these quotes kind of just would ring back to you that we once said never give up at any time, keep pushing harder, because people would just forget the fact that they just need to push a little harder or just put in so much more effort to see results, but they just give up easily. Okay, so just remember this. You can write it at the tip of your note or anywhere, somewhere, that never give up at any time, keep pushing harder. So a few words to just get you on track. The first one is that forex is a skill, just like other skills anywhere globally, where you could learn and could make a living out of the skill. For example, you could learn baking and make a living out of baking, or you could learn sewing and make a living out of sewing. Same thing is forex. Forex is a skill where you could learn and make a living out of it if you put in the right amount of effort, because you just need little effort. So sorry, that's wrong. You need to put in the right amount of effort. Yes, amass yourself with the right amount of knowledge, and you would see results. Okay, so forex is a skill. Second point is that forex is not a get rich quick scheme. I think this is where many people miss it wrong, because they just want to get into the market and make big money out of the market. But actually, the way the market is, it can get you rich, but it will not get. It's not a get rich quick scheme. Yes, forex could get you rich if you put in the right amount of effort and get the right amount of knowledge. Okay, but it's not a get rich quick scheme. Get that out of your mentality. Okay, third one, give yourself a 1 year analogy. We tell you to give yourself a 1 year analogy. Remember we said previously, never give up, keep pushing harder. So many people would try 3 months, 4 months and just give up, but give it a year. Put in the right amount of effort for a year, you would see results. Okay, we are so sure of you seeing results if you put in the right amount of effort after a year. Yes, so just give yourself the 1 year analogy. Make sure you push harder. Don't give up before a year. Okay, push harder to the end of a year, and you would see results. So the forex basics. The forex market is also called the FX market, or the spot options. You could see it in different places, name different things, but it's open 24/5. That means it's open 24 hours of the day, 24 hours in 5 days of the week. So we have Monday, Tuesday, Wednesday, Thursday, Friday, and forex market is open 24 hours between Monday to Friday. It's closed on Saturdays and Sunday, just like your normal working days. So secondly, an average of $5.3 trillion is traded daily in the forex market. And yes, every day, every single day that goes by in forex market, we have an average. This is just an average. It could be more, it could be less a bit, but an average, okay, of $5.3 trillion is being traded daily in this forex market. So third one is that the major participants in the forex market, like the top big players, the main people that are involved in the forex market, are our central banks, hedge funds, intra banks, or commercial banks. So every single bank you see, central bank, commercial banks, are one way or the other participants in the forex market, and they're actually the big boys or the big players that we have in the forex market. And common misconceptions about forex. You would always hear misconceptions about a lot of skills, especially when it has to do with money or is involved with money. But we want to actually raise your mind off this misconception. The first one is that Forex is a Ponzi scheme. Forex is not a Ponzi scheme. A Ponzi scheme is kind of like a pyramid scheme where you have to refer people to get money, refer and all that. Forex is nothing like that. Okay, Forex does not need you to involve calling other people. It's something that you can just do from the comfort of your house. Once you've learned the skill, you get the right amount of result that you need to see. So it's not a Ponzi scheme. Secondly, we've said it's not a get rich quick scheme. Okay, because people would always say Forex is a get rich quick scheme, but we've told you it's not a get rich quick scheme. The third one is that Forex will soon crash just like other schemes, and that is not true. Okay, since we have the big players, we have your central banks, your hedge funds, and all that. They are kind of big players, and they don't. It's not just going to crash soon. Okay, because Forex will buy and sell currencies, and the only basis by which I could see Forex coming to a hold is if every country in the world is using the same currency, right? If every country in the world is using a particular amount, same currency. Okay, for example, in Japan we have the yen, in US we have the dollar, in London we have the pounds, in Nigeria we have the naira, in Ghana we have the cedis and all that. But if every country in the world is using all the same currency, that is the only criteria I could see Forex coming to a halt, but that is not going to come soon anytime soon. Okay, so it's not going to crash soon, just like other schemes. Then fourth one, Forex is illegal. Honestly, erase this out of your mind, because for a central bank to be participating in the Forex market, definitely it's illegal or something, or it would have gone, they would have gone through the necessary um channels to make it legal, but it's actually not illegal. It is not illegal. Trust me, Forex is not illegal. Some countries could have banned Forex here and there, but in Nigeria, right now, Forex is not illegal. You can trade because you have your central bank, your normal banks trading Forex and making um the necessary profit out of it. So to our next one, what are brokers? We just want to trade these. Brokers are actually people that trade on your behalf. They take your money and trade on your behalf. They are people that trade on your behalf. Okay, they are kind of big players in the market also. So you need a broker because you are not a big player yet in the market. You don't have $100 million, $1 million, and all that to necessarily move the market. So these brokers take your little money and help you trade in the forex market. They are kind of like a middleman. Yes, they're a middleman between you and the forex exchange market, foreign exchange market. Yes, so they are a middleman, the middleman between you and the foreign exchange market. They trade on your behalf in the foreign exchange market. That's just brokers in the simplest of forms. And how does trading work? Trading has buyers and sellers. Buyers are people that are bidding for a particular currency. Sellers are those that sell it off. What will move the market is actually an action of buying and selling simultaneously happening or concurrently happening. So once you buy and once you sell, there's always a movement in the market. And you can take a screenshot of this, but this is going to be your first trading vocabulary word because you would see it as you go on in forex. First one, buyer. We said a buyer is a person that is placing a bid for an asset. Someone that is buying or placing a bid for a particular currency is a buyer because it believes it would increase over time. The second one is a seller. Someone who is going to sell an asset or sell a currency because it thinks it will depreciate over time. Okay, so the third one is long or bullish, and this is a condition where we see price rising. For example, if the price of Fanta is rising, we could say the price of Fanta is bullish or long. So fourth one, we have short or bearish. This is a condition in which prices are reducing. Yes. So if the price of Coke is reducing, we say the price of Coke is bearish or short. So when a market condition is reducing, it's bearish. Once it's rising, it's bullish. Okay. So these are the first for trading vocabulary words. I would advise you to write this down. Okay, because you'll be hearing them from time to time as we go on in this course. So we've come to the end, and bye for now.